sense is run by a bunch of investment bankers, and Morningstar's tools can help make it.
I'm Jason Stipp from Morningstar. The government released its employment report on Friday, and it was disappointing to say the least. The headline number, although it looked good on the face of it, at 431,000 jobs added in May, was less than a lot of people were expecting. But I think even more of a disappointment was the number of private sector jobs added. That's after you remove the census workers, and that was only a little bit more than 41,000 private sector jobs added. Here with me to dig into the numbers is Morningstar's Bob Johnson. He's Associate Director of Economic Analysis, and Vishnu Lekraj. He's an equity analyst covering the employment sector. Thanks for being here again, guys.
Thank you.
So Vishnu, I wanted to start with you. We talked a lot yesterday about really taking out the census number to see how we're doing on a more fundamental level, and you said you were really hoping to see 200,000 private sector jobs added. Obviously, we got much less than that. Are you concerned about this? Is this a big worry for us?
I'm not going to sugarcoat it for anybody. It is a worry. 200,000 is what I expected. We only ended up with 41,000. Every category in the private sector was pretty much weak, led by the construction sector, which, got shed 30,000 jobs. I believe Bob will talk a little bit more about that, but I am a little worried, to be honest with you.
Sure. Bob, what was behind the disappointment? What were some of the factors underneath there that caused us to not see as many jobs added as we thought?
The big deltas, the big changes in this particular month were two things. One was the professional services category, which had a lot of legal, accounting, tax people coming off the April tax season that was a bigger jump than usually happens there. So that area was a big disappointment, at maybe 50 to 70,000 jobs short of where I thought that category might be. So that was the number one disappointing category. The second, and I guess it's probably not unexpected from what you're seeing some of H&R Block and Jackson and some of the other tax preparing people, but that's certainly been one of the factors. And the other was construction, which had a surprisingly strong job growth in the month of April. And then we actually lost 35,000 jobs in the month of May. And again, most of those were on the commercial side of the house. That's where a lot of the weakness was.
Okay, and we talked yesterday as well about that these numbers are going to be somewhat bumpy, that the ADP report had suggested that there was a slowdown in private sector. Do you think that this is not uncommon, that we might see some bumpiness here, or should we be worried about a recovery that's stalling and could bring us to a double dip or something like that? Well,
I mean, it's going to be bumpy. As I've always said, up and down every month. It's not a big deal as long as the trend is positive. But the trend this month really slowed a lot.
It was still positive.
Was still positive. Remember that we were experiencing hundreds of thousands of jobs lost every month in 2009. This year, it's been positive. It slowed a little bit. But from what I'm hearing on the ground from my employment services guys that I cover, it is improving, but albeit at a really slow pace.
And it could be lots of bumps along the road. Now, Bob, we've been talking all along here about taking out the census numbers, but those people are actually employed, even though it's temporary. They are making money.
Yes.
Could this have a stimulative effect that the market really just isn't appreciating right now?
I think it could have some of that. I certainly think, as with cash with clunkers, many people thought, well, it's one time, it pulls forward, it doesn't help, but it really primed the pump. It got people into the dealerships, and it got people started thinking, I need a car, and it got the mentality shifted around a little bit. In the same way, having 400,000 more jobs in the economy maybe make people feel a little bit more confident. Now, I will add, the early indicators aren't real strong behind that point. May retail sales were just a little softer than I may have hoped, and that would have been the period where the census workers all got hired. So, maybe they've got to, wait until they get their first paycheck or whatever, but indeed, the retail sales in May weren't as strong as one might hoped.
So certainly how stimulative it may be will depend on how much these folks are willing to open their wallets and spend a little bit. Vishnu, were there any silver linings? Was there anything in the report that you could take some hope away from this, or was it all pretty much just kind of disappointing across the board?
From my standpoint, you have some good positive stuff. You had temporary labor that continues to add a lot of jobs, added over 30,000 this month. You have back office stuff, back office administrative positions that were added to the economy. That was also positive. The unemployment rate, and to give Bob some credit here, he really nailed that number this month, fell to 9.7%. Which on the face of it, and coupling that with a strong headline number in terms of the non-farm job number, that could help and put some confidence into the economy. But when you dig down deeper, it's
still a disappointing report. Bob, did you see anything that you took away that was maybe a silver lining?
Sure. I mean, one of the things that I always stress, and I mean, again, I don't wish poorly on anybody, but whether I get better incomes for consumers from more people working, or whether the people that have a job make more money or work more hours, I'm a little bit indifferent mathematically. Either way, it gets more income and more spending. And this week, or this month, we saw the hours worked go up, especially in manufacturing, 0.3 of an hour. That's one of the biggest increases in the backlog of that number. So that's that was really a great number to see. And the real wage number also went up, so people are actually getting paid just a little bit more too. Or alternatively, good paying jobs are hiring more of the people. It could be either one of those as well. So the hours worked are looking good, and the real wage is looking good, but the number of people employed, not so good. So that's kind of where we stand.
So last question for you then. When you have a disappointing report like this, even though we're still seeing a positive trend, at what point do you say, this is cause for us to really rethink the way we're thinking about the recovery and the way the job recovery is progressing? Is it time to do that yet, or do we really need more information?
Not even close. You have to have a pattern set of either slow, zero growth or negative growth that make us feel very concerned about it. As long as the job market is growing slowly, or as long as it's growing, it's a good thing. We expect it to grow slowly, or at least I do. That's what I have in my models. That's what I've been saying to our viewers and to our clients, that it's going to be a slow growth here. So as long as that trend is positive, it should be good.
Bob, rethinking anything at this point, or more information?
Not yet. I need to keep watching, but we are watching more closely. But certainly my key thesis has been manufacturing gets better. Those are really great paying jobs with longer hours. That eventually drives more leisure spending, more services spending. And the services spending and services jobs, frankly, just haven't kicked in yet. And when we start to see some of the employment and some of the manufacturing data getting worse, which it isn't yet, they're all still very bullish. That's when maybe I put my worry hat on a little bit more.
Okay, well, guys, I appreciate your insights as always. I wish next time we'll have a little bit more positive news to talk about, and so we'll certainly check in with you again. Thanks for joining me.
Thanks a lot.
For Morningstar, I'm Jason Stipp. Thanks for watching.